Retailers delivering solid quarters, solid guidance. Stephanie, I know the two names you like, Nike and Costco. In terms of Nike, what kind of growth are you expecting? Will this be a good cost-cutting story, or is this a good stealing market share story?
You know, for Nike, I think it's a combination. The company has a fabulous brand. They have a great distribution platform. They also have been very good in terms of their supply chain and controlling their inventories. I think that I tend to gravitate towards companies that have long-term goals, and this company has a long-term goals of growing earnings 15% between now and 2015, with upper single-digit, low double-digit revenue growth. And again, it's going to be because they dominate, they focus on emerging markets, they're focusing also on direct to the consumer, more store formats, and controlling costs. So I think there's a lot of great things happening at Nike. On weakness in the low 80s, I think it's a good buy here at these valuations.
Now, obviously, a large part of that growth strategy will come from China, responsible about $4 billion worth of growth by 2015. Are you worried about any kind of slowdown there or an increase in interest rate hikes and Nike won't be able to reach that growth goal?
You know, what's interesting about China is that all the consumer companies that have reported, McDonald's and Yum and several other companies, they've all posted very strong numbers in China. So if anything, I think actually that you might have some upside for Nike in China. And that's mainly because of the growing population over there and the kind of the wanting the must-have products. Nike's certainly one of them.
And then moving to Costco real quick, how sensitive is this stock to higher oil prices and a price-conscious consumer? Because you could argue that the wealthy will keep spending, which would make a case for, say, a Saks and a Nordstrom's. But where does that leave Costco?
I think you have the same customer that goes to Nordstrom and Saks that goes to Costco. This company's been able to do a very good job through recessions and through good times to drive same-store sales above their peer average. They're able to offer very attractive prices for its customers, and yet they also have an excellent merchandising strategy as well. So I think this company will continue to deliver. The valuation is very attractive at the low end of its historical range, and I feel really confident in its growth strategy both here and abroad.
All right, thanks, Stephanie. Sticking to Nike and Costco for that retail growth. Thanks so much.